Welcome students to this session. This is part 2 of module 3 of unit 1, that is Introduction to Cost Accounting of the course Fundamentals of Cost Accounting. In this session, I will discuss classification of cost on the basis of functions, behavior of cost and management decision making. That is, this module will enable you to understand how costs are classified in a business enterprise on the basis of functions, behavior of cost, and management decision making. Classification of cost is the process of grouping the components of cost under a common designation on the basis of similarities of nature, attributes, or relations. As per Cost Accounting Standard 1, costs are classified on the basis of elements of cost or on the basis of traceability of cost or on the basis of functions, or costs may be classified on the basis of behavior and management decision making. I have already discussed classification of cost on the basis of elements and traceability of cost in the previous video. Now coming to classification on the basis of functions. As you all know, a business enterprise performs a number of functions like manufacturing, administration, selling, distribution, research, etc. Costs may be required to be determined for each of these functions, and on this basis, functional costs may be classified as production or manufacturing cost, administration cost, selling and distribution cost, and research and development cost. Production or manufacturing cost is the cost of all items involved in the production of a product. These refer to the cost of operating the manufacturing division of an undertaking and include all costs incurred by the factory from the receipt of raw materials and supply of labor and services until production is completed and the finished product is packed with the primary packing. Normally, production or manufacturing cost includes direct material, direct labor, direct expenses and factory overheads. That is, aggregate of factory indirect material, indirect labor and indirect expenses. Thus, manufacturing cost can also be referred to as the aggregate of prime cost and factory overheads. Administration costs are expenses incurred for general management of an organization. These are in the nature of indirect costs and are also termed as administrative overheads. Administration cost is the cost of administrative functions, that is the cost of formulating policy, directing, organizing and controlling the operations of an undertaking. In most of the cases, administration cost includes indirect expenses such as salaries of staff, rent, rates and depreciation of office building, postage, telephone and office supplies, general administration expenses, etc. One has to note here that administrative cost will include the cost of only those control operations which are not related to production, selling, distribution and research and development. Selling and distribution costs are concerned with selling and distribution. Selling function includes activities directed to create and stimulate demand for company's products and secure orders. Selling costs are indirect costs related to selling of products and services and include all indirect costs in sales management of an organization. Distribution costs are incurred to make the sellable goods available in the hands of the customer. Distribution costs are the costs incurred in handling a product from the time it is completed in the factory until it reaches the ultimate consumer. Some of the examples of selling and distribution costs are salary of the sales manager, commission of salesperson, expenses on advertisement, insurance, rent, rates and depreciation of sales office or showroom, freight outward, export duty, shipping, etc. Research and development costs are the cost for undertaking research to improve quality of existing product or improve process of manufacture, develop a new product and so on. It also includes cost incurred on market research. Development cost includes the costs incurred for commercialization or implementation of research findings. Examples of activities typically considered to fall within the research and development functional area include the research to discover new knowledge, applying new research findings, formulating product and process designs, testing products and processes, modifying formulas, products or processes, designing tools that involve new technology and so on. Another criteria which is suggested by Cost Accounting Standard 1 and commonly used by the business enterprise for classification of cost is based on behavior or variability of cost. Costs are classified based on behavior as fixed cost, variable cost and semi-variable cost. Fixed cost is the cost which does not vary with the change in the volume of activity in the short run. These costs are not affected by temporary fluctuation in activity of an enterprise. The Chartered Institute of Management Accountants of London defines fixed cost as the cost which is incurred for a period and which within certain output and turnover limits tends to be unaffected by fluctuations in the level of activity, that is output or turnover. These costs are incurred so that physical and human facilities necessary for business operations can be provided. These costs arise due to contractual obligations and management decisions. They arise with the passage of time and not with production and are expressed in terms of time, and hence these are also known as period cost. For example, rent, insurance, depreciation, salaries, etc. Variable costs are those costs that vary directly and proportionately with the output or volume of activity. It should be kept in mind that variable cost per unit is constant, but the total cost changes corresponding to the level of output. It is always expressed in terms of units. Examples of variable costs are direct material, direct labor, direct expenses, etc. Semi-variable cost contains both fixed and variable elements. They are partly affected by the fluctuations in the level of activity. Because of the variable element, they fluctuate with volume, and because of the fixed element, they do not change in direct proportion to output. Semi-variable costs change in the same direction as that of the output, but not in the same proportion. Examples of semi-variable costs are factory supervision, maintenance cost, etc. Some costs are influenced by management decision making. Some of the main criteria of classification of cost based on management decision making are avoidability, controllability, and normality of cost. On the basis of avoidability, costs are classified as avoidable and unavoidable costs. An avoidable cost is one which under given conditions of performance efficiency should not have been incurred. That is, if proper planning and strategies are followed, These costs can be avoided without affecting the quality of the product and productivity. For example, advertising cost can be considered as avoidable cost if the sales of company do not get affected even when advertising is discontinued. Thus, avoidable costs are those costs which under the present conditions need not have been incurred. An avoidable cost is one which will not occur if a department is closed, operation is cancelled, or product is discontinued. In other words, it is an expense that can be avoided by eliminating specific operations. These costs are often identified as variable costs. An unavoidable cost, on the other hand, is a cost that is still incurred even if the activity is not performed. For example, if a manufacturing plant shuts down, its avoidable costs, that is variable costs like materials or supplies, will be zero, but it still needs to pay for idle equipment, property taxes, lease payments, etc. Unavoidable costs are those costs which under the present conditions must be incurred. These costs are often considered fixed costs. It is the cost that must be incurred under a program of business restrictions. Cost, when categorized in relation to persons regulating them, can be classified as controllable cost and non-controllable cost. Controllable cost is one that can be influenced or regulated by the manager or head responsible for it. The Chartered Institute of Management Accountants of London defines controllable cost as the cost which can be influenced by its budget holder. These costs can be either increased or decreased based on decisions on how to operate business. For example, direct material, direct labor, and certain factory overhead costs are controlled by the production manager. Another example is the sales manager has control over the advertising, sales discount, and commission of sales personnel. On the other hand, non-controllable costs refer to a cost that cannot be altered based on a personal business decision or need. These costs are not under the control of a specified manager. These are not changed by employee action or business decision and hence cannot be influenced by decisions or actions of the manager. Non-controllable costs are set expenses for a long duration of time and hence fixed in nature. Some examples of non-controllable expenses are rent, insurance, salaries, license fees, and so on. While some of these can be changed in the long run, the cost will not change in the short run. On the basis of normality, costs are classified as normal cost and abnormal cost. Normal cost is incurred in the normal conditions during the normal operations of the organization. These costs are normally incurred at a given level of output in the conditions in which that level of output is achieved. Examples of normal costs are repairs, maintenance, normal wastage, etc. Abnormal cost is unusual or irregular cost, which are incurred due to abnormal situations of the operations or production. These costs are of non-recurring nature and incur due to some unexpected mishappening in the business. Examples of abnormal costs are destruction due to fire, loss due to breakdown of machinery, loss due to lockouts, etc. To conclude, Cost Accounting Standard 1 lays down the basis for classification of cost. Taking into consideration this standard, the cost accountant will classify the cost. However, the classification will be based on the need and the requirement of the management. Thank you.